Hi, my name's Kelly Earle, and I'm the Vice President of Communications for Skeena Resources. Today we're going to be talking about Skeena's Eskay Creek project, which is a past-producing gold-silver mine, which is located in the Golden Triangle of northwest British Columbia in Canada. So we'll jump right into the presentation. There's the obligatory forward-looking statements. Then we'll talk about our property locations. So the Golden Triangle is an area that's very well geologically endowed. It's really opened up lately for exploration because of vast improvements in infrastructure. And there have been a number of major mining companies who've come into the area lately, such as Newcrest. And Skeena has two projects in the Golden Triangle, Snip and Eskay Creek. They're both past producing mines that we've optioned. Snip we own 100%, and Eskay Creek we have an option to acquire 100% from Barrick. And the focus of this presentation is really going to be our Eskay Creek project. So I'll talk a bit about the board and management team of Skeena. The whole management team and board is fairly new within the last 5 years. Walter Coles is our president and CEO. He's an investment banker by background. Craig Perry is our chairman. He stepped up to be chairman about a year ago. And Craig's background, he's one of the co-founders of NextGen and EMR Capital. Borden Putnam is our geologist on the board. He was an advisor to several large investment funds out of the US. Isaac Bernstein is our director representative from Hochschild. Hochschild has an option to acquire a 60% interest in our Snip project. And finally, Suki Gill just joined our board and she runs our audit committees. On the management side of things, Andrew McRitchie is our CFO. He has about 16 years worth of experience working with junior mining companies. Shane Williams is our latest addition to our management team. He's our new Chief Operating Officer. He was formerly Vice President of Operations and Capital Markets with Eldorado Gold, and he took the Lamaque project from PEA through to production. He also has quite a bit of experience with open pit projects in the north, so he's a really good fit for Skeena and our open pit Eskay Creek project. Next is Paul Geddes. He's our Vice President of Exploration. He looks after all the geology. He was formerly with the Osisko Group of Companies in Barkerville, but joined us about 2 years ago now because he was excited about the potential of Eskay Creek. I'm a geologist by background who does all the corporate development and communications for Skeena. And finally, Justin Himmelwright is our VP of Sustainability. And Justin looks after all our permitting, First Nations, and environmental issues, which are extremely important when you have two past producing mines. So next we'll take a look at the infrastructure in the Golden Triangle. As I mentioned, there's been huge improvements in infrastructure in the last decade in this area. There's been over $2 billion spent, including on the Northwest Transmission Line, which follows Highway 37, all the way up to the Red Chris mine, where Newcrest just bought a 70% stake in the project. And then within the last 7 years, there's been 3 hydroelectric facilities built between Snip and Eskay Creek. So this is an area that was extremely remote when these mines were in production in the 90s and early 2000s, fly in, fly out, diesel powered. And now we have these 2 new hydroelectric facilities, which gives us access to 6 cents per kilowatt hour power. So completely changes the dynamics at which you can mine and decreases the cutoff grade too. So the Volcano Creek hydroelectric facility is only 7 kilometers down the road from Eskay Creek. So we'll talk a bit about the history of Eskay Creek. Eskay produced 3.3 million ounces of gold and 160 million ounces of silver at a staggering 2.5 ounces per ton. So it was the highest grade gold mine in the world when it was in production from 94 to 2008. It had extremely high cutoff grades at the time because, as I mentioned, it was very remote. The price of gold was very low when the mine was in production. So the cutoff grades ranged from 15 to 30 grams per ton. So extremely high grade. Our thesis was pretty simple in acquiring the project. What material was left behind that was not economic when the mine was in production that would be economic now because the price of gold is much higher and the infrastructure has much improved in the area. So we acquired quite a bit of historical information, and it was with that 700,000 meters of historical drill data that we were able to start the basis for our resource, and that led us into the PEA. So I want to quickly talk about the Eskay Creek deal terms. We optioned this project from Barrick in December of 2017. It was a 3-year option. We paid nothing up front for it, but Barrick did have a back-in right where they'd be able to come back in for 51%. So I'm excited to announce that we just renegotiated a deal with Barrick, which sees them extinguishing the back-in right, Skeena owning 100% of the asset, and Barrick becoming a major shareholder in Skeena. So once the transactions close by the end of this year, Barrick will own about 12.4% of Skeena. That equates to 22.5 million units. Each unit is 1 share and half a warrant. They'll receive a 1% net smelter royalty on the entire project. And finally, they'll have a right to appoint someone to our board of directors and also to participate in future financings. So we're very excited that we're about to own 100% of the asset as we push it forward towards pre-feasibility and into development. So we'll take a look at the overall resource now. We released this in November of 2019 when we put out our preliminary economic assessment. The global resource is sitting at just under 4 million ounces, and it averages 4.4 grams per ton gold equivalent open pit. So extremely high grade for an open pit deposit. There's about 300,000 ounces that are sitting in the underground portion of the resource still that we didn't put forward to the PEA, but the rest is open pittable, and it's on that 3.7 million ounces that we push forward in the PEA. It's a very shallow open pit. The maximum depth is only 236 meters and the average is just 180. And I wanted to point out the difference between the grade in the inferred and indicated ounces. So inferred versus indicated ounces is really a matter of drill spacing. In areas where the drill spacing is very tight, those are indicated ounces. That's mostly where it was mined historically. And drill spacing is anywhere from 10 to 15 meter centers, so very tight. Areas of inferred resource is areas that were below the historic cutoff grade, and the drill spacing is much wider, anywhere from 50 to 75 meters. So you'll notice that on a tonnage weighted basis, we still have about 14 million tons in the inferred category, about 13 million tons in indicated, and the grade is much lower in the inferred. It's only 3 grams per ton gold equivalent, whereas the grade for the indicated is 5.9. And this is largely a function of that drill spacing that I mentioned. As you move away from a drill hole, there's a penalty to the grade. And we're finding that as we're going in and doing infill drilling to reduce the spacing between the drill holes, we're actually able to see an increase in the grade. So that 3 grams per ton gold equivalent will come up to closer to 5.9. So global resource is 4 million ounces at 4.4 grams right now, and our internal target is 5 million ounces at 5 grams per ton gold equivalent, and we're well on our way there. I'll show you a cross section in a moment that'll demonstrate that. So now I have a video that I wanted to show you of Eskay Creek. This will just kind of give a lay of the land, an overview of the infrastructure, and then we'll dive into the deposit itself and a bit of the geology, the different zones, and we'll take a look at the exploration that we're going to be doing as well. So there's the Golden Triangle, and our projects, Snip and Eskay Creek, will pop up here. You can see Highway 37 and the Northwest Transmission Line is coming up here now, and that goes all the way up to Newcrest's Red Chris mine. We actually just sold a third project called GJ to Newcrest. It's a copper gold porphyry project that's on trend from Red Chris, and we sold that for $7.5 million in cash earlier this year, and that'll help us advance Eskay Creek non-dilutively. So you can see the 3 hydroelectric facilities there that just popped up, including Volcano Creek, that's only 7 kilometers away. We'll zoom in now on the project. This is an area of rolling meadows. There's no glaciers or steep mountains that we have to deal with. That ridge on the left-hand side there, that's where the open pit will be, the main 21 zone pits. We'll zoom in here on the drill in a moment. This is from some drilling we did last summer in the 21 zones. And then we'll take a dive underneath the deposit. So there's the main open pit there. The main open pit has the 21 zone deposits, and then there's a satellite open pit to the south with the 22 zone deposits. And that's the global resource you can see there, the 4 million ounces that I was talking about. And the resource is split into 2 sections geologically. The top red portion is called the contact mudstone, and below that we have the rhyolite horizon. And the difference between these 2 sections is really grade and deleterious elements, so mercury and arsenic. There's a direct correlation between mercury and arsenic and grade of this deposit. So historically, when they were mining at 2.5 ounces per ton, there was that much more mercury and arsenic in the deposit. But because our global average is going to be 4.17 while we're mining, there's significantly less mercury and arsenic. And I would also point out that you only find it in that high-grade contact mudstone horizon in the red. And on a tonnage-weighted basis, only 30% of our current resource is in the contact mudstone. The other 70% is in the rhyolite horizon, and the rhyolite horizon is clean ore, so no deleterious elements. So when we look at the mine life, we deal with smelter penalties for the first 3 years when we mine through the contact mudstone horizon, but it's also higher grade, so higher payback. And then we swap over to the lower grade rhyolite horizon, and we don't pay any more smelter penalties. So it's definitely not the Eskay of the past. It's definitely mineable. We've received life of mine concentrate contracts, and we're just looking at optimizing those right now as we push forward with the pre-feasibility study. So there, once again, is a look at the global resource and the 2 open pits, the 21 main zone pit and the 22 zone satellite pit. So let's jump into the PEA highlights. Again, we put these out in November of last year. We're contemplating a 9-year mine life, producing just over 300,000 gold equivalent ounces per year. The grade overall is 4.17 grams per ton open pit. That gives us a $638 million after-tax NPV at a 5% discount, a 51% after-tax IRR, $615 all-in sustaining costs, so extremely robust deposit. We were very pleasantly surprised by the numbers, and I would point out, as I just pull up the sensitivity chart here, that we did this at a base case of $1,325 gold. So all the numbers I just quoted at $1,325. When we jump to $1,500, you can see how the after-tax NPV jumps to $878 million and the IRR jumps to 63%. I plugged in spot prices this morning of $17.83 gold and $18 silver, and the after-tax NPV at a 5% discount jumps to $1.3 billion, and the IRR goes to 80%. So this is an extremely robust deposit in a rising gold price, but because it's so high grade for an open pit, our downside is also protected. So this is also a kind of deposit that would work at $1,200 or $1,000 gold, but it's getting pretty exciting as the price of gold continues to rise. So this is the mine design, and there's only a few things I wanted to point out. It's pretty simple. We're just creating a straight concentrate to ship off to smelters. But there's an existing TSF, so tailage storage facility, and also former waste dump. These are both non-fish bearing or dead lakes. All the tailings are stored subaqueously, and this is where we envision storing all the tailings that were mentioned in the PEA. There's ample storage capacity in the tailings storage facility, and it's already permitted as a discharge point because this is a brownfield site, a past producing mine. Also, the former waste dump, for the first 3 years of the mine's life, they were just doing direct shipping ore that had a 30 gram per ton cutoff. And that's because they were waiting to build the mill. So while they had that 30 gram per ton cutoff, any waste rock that was below that went into this former waste dump lake called Albino Lake. So you can fly over and actually see the dumps, and we estimate there's several 100,000 ounces sitting in this lake here. So that's going to be a little added bonus of a way we can add some more ounces. We'll probably drill this off later next year. Next, I wanted to touch on the exploration potential of Eskay Creek because it's vast. Historically, they really just drilled shallowly. Shallow ounces were cheap ounces. The deepest drill holes were only drilled off from about 250 meters underground. So there's an amazing amount of exploration potential left. What you're looking at this slide here is our current global resource in gold, and all the little blue dots are anything greater than 4 grams over 2 meters. So you can see that there's a cluster below the 22 zone pits, so the depth potential and the feeder structures below the 22 zone have not yet been explored, parallel to the 21 zone pits, and also the entire depth potential of the project is not yet known. So these are going to be some of our main target areas for exploration drilling later this year. And I wanted to show you a cross-section through the 21 zone that shows some of the infill drilling that we've done and how we're going to get to that 5 million ounces, and also some exploration success we've had so far. So this is a cross-section, a slice through the 21 zone. You can see the layers in the deposit. As I mentioned, there's that contact mudstone horizon that's in dark orange. Then there's the clean rhyolite horizon below that in the lighter orange and the gray. You can see the resource pit limits. And finally, there's a basalt cap that caps off the entire deposit. That's mostly non-mineralized except for where you get some recirculation and faults. So we were doing infill drilling here. All the white dots are historic drill holes. You can see 59 grams over 6.7 meters, 45 grams over 23 meters. We did some infill drilling, tagged into 2 really good hits, 27 grams over 9.4 meters, 17 grams over 7.5 meters, and you can see that we're filling in that gap between the historic drill holes. The nature of the deposit, a volcanogenic massive sulfide deposit, VMS, just means it represents the sea floor. So it's a very tabular and consistent in nature, and that's why infill drilling is working so well for us and why we're so certain that we'll be able to fill in the gaps, increase the grade, and actually add ounces with our infill drilling. But I also wanted to point out some exploration success that we had here. So you can see the resource pit limits. We let a few drill holes go below that, and we tagged into 314 grams over 2.21 meters. That's our highest grade drill hit to date, and excitingly, it's completely outside of our current resource in an area that's called the lower mudstone horizon. So I mentioned that this project, the deposit represents the sea floor. So the contact mudstone horizon is higher up in the sequence. That's where most of the grade was historically. This lower mudstone horizon is lower in the sequence, and it represents where the seafloor would have been, say, 1,000,000 years earlier. So VMSs often come in stacked sequences. So this is our first evidence of one of those stacked sequences. There's a handful of historic drill holes, but really not much. So this is our prime target for some exploration drilling later this year. We're also going to do some much deeper exploration drilling because, as I mentioned, VMS deposits can come in stacked sequences, so there could be something even lower down than this where the seafloor was even earlier than this lower mudstone horizon. So very exciting exploration drilling to come later this summer. I wanted to briefly touch on some stats about the deposit and just how spectacularly high-grade Eskay Creek is. So what you're looking at on this chart here is open pit development projects in North America and Australia on the top chart, and worldwide on the bottom chart. You can see the average grade for an open pit deposit is 1.46 grams per ton. So that's about the average worldwide. Eskay Creek is sitting all the way up here at 4.3 grams per ton gold equivalent. So extremely high grade when and if we get this deposit back into production, especially if we can bump it closer to that 5 gram per ton target, it'll be one of the highest grade operating open pit mines in the world. Next, we'll take a look at market capitalization for Skeena and our price to net asset value. Our market cap right now is sitting at $341 Canadian. We've had some significant share price movement recently. Our share price has performed very well over the last year. You can see our price to asset value, which is essentially our market capitalization and the NAV of the project. We're trading at about 0.5 times NAV right now. You can see the average for a lot of projects is about that 0.7 to 0.8. We've moved up very well on this chart. We started at about 0.2 times NAV, but we would argue that such a world-class deposit in a safe jurisdiction with the vast improvements in infrastructure should really be trading at a premium to NAV. So we're going to try and continue to raise our share price and push this over to a one times or higher than that price to NAV ratio. Next, I wanted to touch on our plans for Eskay Creek for the rest of this year and into 2021. We're in the middle of infill drilling. We completed about 4,300 meters of infill drilling so far this year. We're about to start up drilling at Eskay Creek again. We've got 68,000 meters of infill drilling left to go, and that's to bring all those inferred ounces into the indicated category. So that 14 million tons of inferred that needs to go into indicated, and that's because we need all the ounces in the indicated category before we can push forward with the pre-feasibility study. So that's our main target. We're also going to complete about 20,000 meters of exploration drilling before the end of this year. So that'll be about 90,000 meters total by the end of this year. We've planned another 117,000 meters of exploration drilling, and that's more regional scale targets, really testing the depth potential. As I mentioned, the exploration drilling on this project has been slim to none because the cutoff grades were so high historically. So we've got a lot planned, and hopefully we can tag into some more stacked VMS sequences. Finally, we've already started the pre-feasibility study with Ausenco. We launched that just recently, and our target to have that out is in the first half of 2021. After that, we'll push forward with the full feasibility study, and we've got continued metallurgical and geotechnical drilling underway. And finally, we've already started the comprehensive environmental and baseline studies that'll take us through the permitting project for Eskay Creek. Lastly, I just wanted to touch on our relationship with the Tahltan First Nation, which is the First Nations group in this area of Northwest British Columbia. Skeena, along with the Tahltan, is one of the founding members of the BC Regional Mining Alliance. It's the first of its kind. It's an alliance between First Nations, industry, AME BC, and the BC government. So the Nisga'a and the Tahltan are the two groups in the Golden Triangle, and in order to be invited into the BC RMA, you need approval from the two First Nations groups. This has been extremely successful. We've traveled the world with our Tahltan partners. The Premier of British Columbia gave a $1 million grant to this project, so it's been very successful. And the goal of this is to really promote mining investment in the Golden Triangle in a sustainable way that works with our First Nation partners. So it's been very successful, and we hope to actually have some more exciting news about our First Nation partners, the Tahltan, out later this year. Lastly, I'll talk about our capital structure. Skeena's market cap is sitting at about $341 million Canadian right now. We have 171 million shares outstanding at the moment. Our share price has performed extremely well over the last year, but we really do feel that we have a long way to go. Extinguishing that Barrick back-and-right and owning 100% of Eskay, which we just announced, that'll be completed fully by the end of the year. That was really our main target for this year, and we think it'll help contribute to a re-rating of the stock. And then, of course, pushing the project forward to the pre-feasibility stage is our next main target, and that'll happen by the first half of next year. So that's a quick overview of Skeena and our Eskay Creek project in the Golden Triangle of Northwest British Columbia. Thank you for joining me, and please feel free to reach out if you have any questions.